Quite a bit of news that we got out of Bloomberg on Friday. Obviously, Monica Crowley, Treasury spokesperson in Navarro on our air today, pushed back on that. How far do you think this went or is going, even despite the pushback?
Yeah, Carl, I think it's really important for the American public to know that Chinese companies, when they list in the U.S., said China signed a special MOU with the U.S. in 2013 that basically exempts Chinese companies from having to actually submit themselves to covered audits or be Dodd-Frank compliant. So all of the U.S. money that goes into Chinese companies, it goes into companies that don't operate under a rule of law and they don't submit themselves to audits. So imagine what kind of fraud is behind some of these companies.
So they don't deserve to be here, essentially, right? And is this being done, do you think, to protect American investors or to put some pain onto China?
Well, forget about what it's being done to do, except for the fact that what we're saying is maybe, just maybe, China should have to adhere to U.S. law if they want to raise money in the U.S. We're not saying that money can't go to China. We're not saying that Chinese companies can't list. We're simply saying that you have to submit yourself to U.S. covered audit standards and be Dodd-Frank compliant if you want U.S. investors to invest. And then think about this also. All the money that's going through the MSCI indices into China for all of the ERISA fiduciaries that invest U.S. retirees' money and even the military and government pensions into Chinese equities, maybe the U.S. money should also adhere to the same standards. They shouldn't invest in companies that don't comply with U.S. securities laws. I know that sounds crazy, Carl, but I actually think that's where we should be today.
Well, Kyle, you know, the Chinese companies have been placed inside the predominant indexes, the MSCI indexes. You have all these pension funds kind of on autopilot buying index-based investments. I mean, it seems like there's multiple stages to any process of unwinding this. And in fact, if they haven't to this point decided that these companies should be compliant by your standards, what's now the impetus to do that?
Well, let's see. So in the U.S., there are 188 listed Chinese companies listed on U.S. exchanges that have a collective market cap of $2 trillion. By 2021, if MSCI implements everything that it says it's going to implement, the U.S. investors will have over $1 trillion invested in companies that don't have a rule of law and they don't submit themselves to U.S. audits. So what I'm saying is this is not an unwind. All we're saying is let's raise Chinese company standards up to ours just so that U.S. investors are protected in the long run. This doesn't have anything to do about imposing pain on anyone. This is just looking back to 2013 and saying what we did as a country was really stupid and what we've got to do to protect U.S. investors and U.S. retirees from investing in a region, again, that has no rule of law, that has no accounting standards. We should just force them to adhere to what U.S. companies have to adhere to already.
But, Kyle, in the meantime, are you still short these U.S. or these Chinese companies that are traded here in the United States? So your fund could be benefiting from the fact that Trump is moving in this direction?
So nice try. So I've never been short a Chinese company in the United States. I have no Chinese positions in China or in the United States. What I'm working on is protecting U.S. national security and our investors' money.
Kyle, I assume this would go for any other country other than China that's in the same position, right?
Right. So when you look at the MOU, there are a few other countries other than Hong Kong and China. But, well, does it matter that Albanian equities don't meet U.S. standards? Well, none of our money is going into Albanian equities. We've got $1 trillion of capital moving into China between now and 2021 based upon indexation and passive flows. And we've already got $2.2 trillion worth of listed entities in the U.S. where they don't adhere to U.S. law. This is insane. And I bet American investors don't know it. Here's another fun fact. When Chinese investors invest in the United States, and let's say the Chinese government gives $5 billion to Bridgewater and they make them $1 billion, Chinese investors investing in the U.S. pay no tax. So all of these things have got to start changing. When we're talking about amending our tax laws, I think we should start thinking about making foreign investors pay the tax in the United States that U.S. investors pay in the U.S.
Marco Rubio has been writing about this for a year or more. Are you saying that this was leaked to Bloomberg 2 weeks before the Chinese officials appear here by coincidence?
I have no idea what was leaked to Bloomberg, but if you go back and look at Rubio's Equitable Act, in the Equitable Act, when he launched it several weeks ago, if you just read the text, what it says is it contemplates a delisting if Chinese companies can't adhere to U.S. audit standards. Now, what I would say is forget about delisting. We should deregister these securities because also Chinese companies have borrowed $1 trillion under a special exemption under the SEC's Reg S that enables them, if they have registered securities, they can sell bonds to U.S. investors or investors abroad in dollars without registering and filing financial statements and submitting themselves to audits. These things that are going on behind the scenes are crazy, and Marco Rubio is the guy that's trying to fix it. And by the way, it's not just Marco. If you look at his committee, it's a bipartisan effort to protect the national security of the U.S. and to protect U.S. investors. Marco Rubio is on the tip of the spear. By the way, I've never met Mr. Rubio. I think what he's doing is amazing, and I think his legislators and that team are looking after U.S. investors because it seems like no one else is.